Good afternoon, folks. Tommy O'Brien coming to you live from TFNN Thursday afternoon. We got about an hour left to go in the trading day, and we got markets pulling back. Treasury Secretary says they're going to buy even more debt back, but equities sliding today. You got tough Walmart numbers coming out, driving this market lower right at 7 a.m., folks. There you were on the S&Ps. Trade lower, bounce into the open, but the acceleration right now from about 12:30, we're lower. By 0.7% in an S&P, off by 54 points at 76.75. NASDAQ 100 off a similar 0.7% right now, off 223 points, 29,287. The Dow getting brought down when you got Walmart down. Walmart's down dramatically, folks. We'll jump over to after the indices. You get the Dow off 1.2%. So much for 54,000. We're below 53, and you got a 52,000 handle. 52,893 for the Dow and the Russell. As yields persist, the Russell negative by 41 points, off 1.4%, under 3,000, 29.98. Now, crude's a problem out here. You got crude up $2.37. We had 87.69. We got so many headlines, right? The war is on the backdrop right now. But nonetheless, crude 86.71 right now. We jump over to yields. Okay. And we got a 10-year right now. Pretty remarkable, folks, when you look at this was the intervention. You give it all up and then some. The 10-year approaching 4.7%, just like that. So much for the 10-year with the intervention. Now, the 30-year, okay, a little bit lower in yield than where we were yesterday, but the 30-year right now, well off of the highs. You traded down from 110.09 to 108.31, right? Remarkable. Now, you know, the headlines are that, yeah, we're talking about more intervention, okay, already. The intervention was yesterday. Well, we're going to need some more of it because yields gave it up just that quickly. Nonetheless, yields right now rising a bit. You got a dollar, rises a bit on that, but we're right at the lows of yesterday almost. 98.90 for the dollar. Gold right now, yeah, continuing the run. Up by another 36 bucks. They said more intervention. We'll take that, gold bulls. Gold bulls will take that. You know it. As gold almost hits 4,600, you jump over the equities, up another 2.2% right now. How about silver? Up 3.5%, 68.16. You take a look at that GDX, folks, on a weekly. How about this, right? And we got the end of today, and we have tomorrow. You're already at 108 million. That's basically right what we did last week, and you're coming into 144. That's coming into. That's what we did on that first acceleration, but it's going to be a big week. You're right back to the highs of April, and the only thing hanging out there now is that acceleration from February to the highs of March. GDX approaching 100, and we hit a high of 100.33 today. Quite a number. Bitcoin. We haven't talked Bitcoin in a while, but you got to talk about it today. Look at this acceleration. Bitcoin, 72,645. How's that for an acceleration for you? And this is the dollar as well, folks. Pay attention to it. Okay, the dollar's trash, right? Gold is great. Bitcoin priced in U.S. dollars is great. Okay, you're telling me? You know, this is real, what we have going on here. And the fact that they're piling on again today, whew, you better believe it, folks. Bitcoin up by 6%, 72,645, making a run just like gold. Okay, assets priced in U.S. dollars, they're going up, folks. Assets priced in U.S. dollars are going up because the dollar is taking it on the chin right now. All right, we jump over the headlines. And yeah, the Treasury Secretary signaling that they have a big toolkit to bring down yields. And he flags a bigger debt buyback potential. Now, they said at least $4 billion. Right? By at least double was the number yesterday, okay? To ensure orderly trading in a thin summer market. Folks, this is not a problem with late August trading, okay? It is a much bigger problem than that. The fact that even Bloomberg puts that in there. Where did they just quote that thin? Was that in their announcement, the Treasury Secretary? So let's see. We're announcing probably at the end of this week, beginning of next week, an increased focus on fiscal consolidation is what he says. We're going to fiscally consolidate everything to do away with that $40 trillion in debt, folks. And hey, you know, we got two choices. You either pay a higher yield or you buy back our own debt with our own dollar that devalues the currency, keeps yields lower. And the reason why you're able to keep the yield lower is because you're using a dollar in the same vein. Pretty remarkable. So what happens? Yeah, you're keeping that lower, and the dollar's going to be taking it on the chin, as has been the case. Now, the 30-year pulled back a bit. Asked how much more the Treasury is willing to do, we have a big toolkit, so we'll see. And part of it is signaling here to show that we believe that yields don't reflect the underlying fundamentals. Well, the dollar's talking and squawking, folks. As that debt hits $40 trillion. Quite a number. And energy prices persisting, which is a problem as well. S&P is off by 55. We're coming back, taking a look at Walmart, folks. Walmart.